Ladies and gentlemen, good day and welcome to the Q3 and 9-month FY2024 conference call of Quantum Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator pressing star and 0 on your touchtone phone. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. My name is Purvangi Jain from Valorum Advisors. I represent Investor Relations for Quantum Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the third quarter and 9-month ending financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are made based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is probably to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Pawan Khaitan, Vice Chairman and Managing Director. Without any further delay, I request Mr. Pawan Khaitan to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Purvangi. It is a pleasure to welcome you all to our earnings conference call for the third quarter and 9 months ended for the financial year 2024. Let me first take you through the financial performance of the company for this third quarter, followed by the 9 months ended results for the financial year 2024, after which we will provide the operational highlights. During the quarter under review, operating revenue stood at 302 crores and the EBITDA was at 79 crores or 26.33%. The profit after tax for the quarter stood at 52 crores with a PAT margin at 14%. Revenue for Q3 was in line with Q2 and the EBITDA margins for Q3 remained robust at 26.33%. This is despite the temporary shutdown for modification and upgrades of our PM1 and the 10 megawatt turbine, and which was alongside a rise in wood material costs. The overall operational efficiencies in power plant operations was enhanced through effective utilization of rice husk waste, which is kuddi, as a cost-effective alternative fuel, reducing costs by about 50% compared to coal. For the 9 months ended under review, the company's operating revenue stood at 912 crores, which was a small decline of about 5% year-on-year. EBITDA is reported at 269 crores, which has grown about 1.6% year-on-year. EBITDA margin stood at around 29.53%, while the profit after tax is reported at around 150 crores, with PAT margins reported at 16.43%. The yearly decline in revenue can be attributed to various market challenges, such as decrease in price and demand pressures, alongside an increased competition from imports. On the ongoing CapEx front, during the third quarter, our PM1 underwent a comprehensive rebuild with new headbox, wire part, press part, reel, and the addition of dryers, which has resulted in an increase in paper production from 25 to 40 tons per day. Additionally, the upgradation of our TG4 from the 10 megawatt is now standing at 13.5 megawatts, and this was completed, which will lead in higher efficiency of steam production with lower costs. Both these projects were successfully commissioned in January 24. Work has also commenced to produce an additional 20 million saplings in the clonal production center, which will be operational by the financial year 2025. I'm very pleased to share that the board has approved a revised capex project cost of rupees 735 crores, an increase from the initial outlay of rupees 285 crores. This increased investment will be towards upgradation and modification of existing projects, mainly paper machines, with a focus on environmental sustainability, which will ultimately result in a 50% boost in our production capacity. Under this new CapEx plan, we have placed orders for the state-of-the-art shoe press for PM4 from Belmer, and their workshop is in Germany, and initiated the procurement of a DBS for our pulp mill, which will result in higher production and pulp yield with lower steam consumption. Thank you. With this, we can now open the floor to questions and answers session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, press star and 1 on the telephone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants may press star and 1 to ask a question. The first question is from the line of Mr. Kunal from Fair Value Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. Am I audible?
Yes, please.
Yes. So in a recent letter was written by the IPMA president urging the government to increase the basic customs duty to 25% from 10%.
Right.
And you have said that the recent quarter witnessed pressures from imports on prices as well as the volume front. Can you quantify the increase that the imports witnessed this quarter and how that has been going on in comparison to the trend?
So we are witnessing, we have already witnessed an increase in imports of almost 40 to 45%, and that's quite a substantial volume which is coming in mainly from Southeast Asia, and that is what is sort of adding to the volumes getting sold in the domestic market. Additionally, with the Red Sea crisis happening, there is a shortfall in the outflow in terms of exports. So that is also adding to the volumes getting sold in the country. So on both these accounts, there is a slight additional pressure on market prices because of these additional volumes coming in. And that is what is sort of affecting the market status, so to speak, currently.
The 40% that you mentioned, that was YOY?
YOY, correct.
And about the Red Sea crisis, it is difficult for us to export now because of the Red Sea crisis. It will be even more difficult, I assume, for the Southeast Asian nations to export to that area. And will that be having an effect of increasing the exports to India because they cannot export to those regions now because of the Red Sea crisis? A temporary increase in imports that we are seeing?
That clearly could lead to a temporary further increase in imports. But I would say that even market per se, the demand is on the rise, though not as big as the imports coming in. So slight unsettlement and uncertain period of operation will be there for a few time going ahead. And I think that it all should settle out sooner than expected, sooner than later. And sort of the industry is quite well competent, well placed to take on such challenges.
About that competitiveness, what is the trend of international pulp or paper prices that you have been seeing?
So fortunately, pulp pricing is on the increase, which is a good sign for us. Normally, we see that paper prices follow the trend on pulp, and so paper prices should fall in line and start increasing as well, though that hasn't happened yet. We are still to witness and that increase to happen. I'm sure in times to come that will also be led and have a salutary effect on the market.
The increase in paper prices would be expected to happen with a lag, right? Lagging the increase in pulp prices. And can you quantify the increase in pulp prices?
Pulp prices is increased by about $80 to $100 per ton from last quarter.
In the last quarter. All right. Is the revised CapEx you have announced of 765 crore rupees?
Yes.
How much of that will be towards your specialty segment?
Well, actually, Kunal, all our 4 paper machines are getting upgraded, and they will help in increasing our production capacity by about 50%, which is quite a substantial jump. So from the current 450 tons per day, we are targeting 675 tons per day of production. And from going ahead, we are, I think, both are PM1 and 2, which will be, on which there will be an output of 80 tons each. So 160 tons each, 160 tons per day of specialty papers there for sure. But even on our bigger machines, some part of that production will also go towards serving the specialty needs. So total of about 25-30% of the overall production capacity will be towards the specialty segment. So which is, I would say, about 200 tons would be the specialty paper production and operation.
All right. Got that, sir. Thank you for answering my questions, and I'll come back in the queue.
Right.
Thank you. Participants may press star and 1 to join the question queue. The next question is from the line of Rusmik Oza from 9 Rays Equi Research. Please go ahead.
Yeah, thanks for the opportunity. So I wanted some more understanding on this bigger effects, how the funding is going to be done, and by when you feel this expansion will get sufficient. This is the first question.
So it's going to be funded by a combination of bank debt and internal accruals. We've already applied for a loan component of 555 crores to banks, and the balance 200 crores will be through internal accruals. A majority of the projects which is going to lead to production increase is going to get completed by March of 25, and a few other projects like pulp mill addition and the other sustainability projects will follow soon and will get over in phases between September of 25 and March of 26. That's right. So, but I think a good part will be within financial year 24-25, and we will see a fair bit of healthy increase in production levels going forward 25-26, and thereafter 26-27 we'll see the full result of this project.
Okay. If you have to bifurcate both in the 2 years, that is 25 and 26 actually, so what kind of growth can come in FY26 and FY27? What kind of growth out of the 50% will materialize in FY26, and how much will come in FY27?
We can expect a growth of about almost 60% in 25-26, and the balance 40% completed in 26-27.
Okay. And current utilization will be completely optimum, right? Will be any dropping utilization as of now. Okay. So probably FY25 probably could see some marginal growth in volumes, and then I'll pick up to turn out in FY26 and 27.
That's right.
And in terms of realizations, can you give us some trend how the realizations of, your end product has been the last 3 quarters, and how do you see it going forward?
So there is a kind of decline. If you are asking about 3 quarters, we were at quite a high in quarter 1, where we returned an EBITDA level of almost 6%, the highest that we've ever returned. Post that, decline in pricing has been there. It's come down from a level of about 85,000 to about 74,000 rupees per ton in the quarter under consideration. And going forward, I think we should be stable around here, not much change. And so it should even out, because it's not only going to be decline, I'm sure it's going to turn around. As suggested earlier, the pulp pricing is increasing. Paper prices should see the turnaround happening, and average out should come back and start proceeding towards 75,000 and above.
Okay. And will that be proportionate, increase in your power production also in your of this new expansion capacity?
Yeah, the fact is that currently we are producing about 25.5 megawatts completely, and after this expansion happens, our total requirement will go up to about between 28 and 29 megawatts, for which we already have the required infrastructure with us. So there is no additional power infrastructure that is getting created.
Okay. Thanks, I'll come back in the queue, sir.
Thank you. The question is from the line of Bharat Gupta from Fair Value Capital. Please go ahead.
Hi. Thanks for the opportunity, sir. A couple of questions from my side. So first, on the order book. So can you just quantify what kind of order book which we'll be working upon, and how has been the order inflows with respect to the new education policy?
So the new education policy has not really been quantified or implemented in its entirety. Only the lower classes up till standard 3 has been implemented. The standards 4 and above are waiting in the wings. They are likely to happen during the course of the year. So there has been no uplift because of the NEP implementation. So whatever is happening is because of the ongoing market conditions, and there is an ongoing demand that is happening on ground. And we are continuing our taking of collecting all our orders in advance, keeping our machines running, and we are going to follow that practice for sure.
Okay. So anything any instrumental, particularly with respect to the order books which we have currently in place with respect to the next fiscal year, anything which you can guide?
So yes, there is clearly a opportunity with this plastic ban, single-use plastic ban that has come in. We have already looked at creating some new files to fulfill that demand and serve that demand. So that's what we are working on, and we are hoping that with this renovation on our PM1 and 2, which will then become more and more suitable to make specialty papers, those order books will get implemented and fulfilled over a period of time, over the next year.
Okay. Sir, you mentioned about the reduction in the realizations as such, and that too we are facing a competition with respect to inputs. But we are based out of the northern side, and we are insular to the whatever happenings which happens with respect to import prices. So just wanted to check, going forward as such, with the pricing trend of the pulp on a increasing side. So do you think that the momentum will be with respect to our momentum and the insularity which we have, so that will actually play across, and we'll be able to pass on the price increase in the subsequent quarters?
Surely, as you have rightly pointed out, we have an insulation because of our location, and more so that we are located nearer the biggest market in the country, which is stationed and located in the north, which is Delhi and NCR. So we do have an advantage there, and which we are using to our advantage and being able to get a realization which is better than most of the other players in the industry. And I think that advantage will continue, and we will be able to stave off the competition from imports for a longer period than others and help in sustaining our pricing for longer periods in the times to come.
The reason why I'm asking is primarily driven by two factors. One, I think 20% of our product portfolio is with respect to specialty, and we are going to increase it to 30%. So the realization in the specialty bit, like how it will be better than the blended realization which we derive?
So normally we get a realization of about 8 to 10% better than the normal writing and printing grades that we make. So that advantage is going to continue, and as we are increasing our volumes, that will further affect and impact our bottom line better. And I think that it also has a play with overall market pricing coming down. It's not that we will be able to sustain our specialty paper prices to that original levels what we were. Some impact will be there. Maybe if let's say the average downfall in writing printing paper prices is 5%, the specialty paper may reduce by 2 or 3%, not so much. So yes, there is a betterment in terms of pricing that we get on a specialty paper compared to writing and printing paper.
All right. Also, sir, with respect to the EBITDA per ton, so in our previous interaction, you always used to guide that the company is looking for EBITDA per ton to be ranging over 25,000. But right now, if I look at the numbers, I know that PM1 was not operational during the quarter. Still, in the previous quarter itself, our number was below 20K and 20,000 rupees per ton, and this quarter itself, it is close to around the similar levels. So any insights, like what are the missing links currently with respect to communication, and also going forward, what kind of a margins per ton you expect on a sustainable basis which you can derive?
So I think what, to my mind, we've hit our bottom as far as pricing in the market is concerned. This average level of about 19 to 20,000 rupees per metric ton of EBITDA that we are maintaining, we can only hope to get better this in future. With further decreasing costs, what has happened is that even though the market prices have come down, they have been supplanted with a reduction in cost of our other raw materials like wheat straw and fuel, and which has helped us maintain these margins going forward. There is going to be further efficiency that is going to be built in by way of these capexes that we bring in, and with the efficiencies and economy of scale that we get and build into our operation, which is going to better our cost of production, we will be able to offset any further decrease if and when it happens. So we are going to maintain these margins, EBITDA margins for sure, and going forward, as and how the market prices are going to turn around, get better, it's going to go straight to better our bottom lines.
Right. And sir, I think operation leverage will also play in, because I think currently we are operating at near around 80-85% utilization level. So
no, we are 90 plus.
Right. So, and that is across both specialty and the packaging.
So sure. No packaging. We don't do packaging at all. It's only specialty and writing printing paper.
Writing printing, sorry. So that way, going forward with the incremental capacities which will be coming in, so I think the number can be whatever range you have guided in the past, so we can adhere to that.
Yes, we are wanting to target similar production capacity levels, which is 90% plus. And that is also, the 90% capacity is not due to market constraints. It is because of operational constraints. There are mandatory downtimes of machines that we have to undertake because of the nature of the machines. We have to bring a downtime to get better efficiencies, change the machine clothing, review and renew our various machine parts. So that's the reason why machines are put into a downtime, and that's why that is what leads to this 90% capacity utilization. Otherwise, if you see machine running, we are operating at 100% of operational hours.
Just a guidance here with respect to the specialty margin. So, how it will be better in comparison to the one which we enjoy in the copier or in the printing side?
So our specialty paper margins would be higher by about 4,000 to 5,000 rupees per ton.
All right. And the incremental capacity, majorly it is towards the specialty paper.
Yes. So not majorly. From the current level of about 20% that we are doing, we'll go up to 30% of the increased capacity. So we will be doing about 200 tons out of the 675 tons that we will be producing in future.
And in the specialty paper, the competition is mainly from the imports, not with respect to any domestic guy. No one is manufacturing that kind of products which we are manufacturing.
There are a few people in the industry who are into the specialty segment like ATC, Paramji, JK Paper. But yes, the competition from imports are limited because the consumer requirement is very, very specific and it's not easy for it to be fulfilled by imports of paper. Imports of paper is happening normally in larger quantities on bigger scales, and specialty requirements are very, very focused in a timely manner, which imports are not able to fulfill. So primary competition is local only, and it is against these, along with these bigger mills, which is much more organized.
Right, sir. Last question from my side. Sir, with respect to the RM increase, so just wanted to check, has it been broad-based across timber, chemicals, or kind of levels which you are seeing currently? So do you want that particular levels will sustain, or there can be a downward going forward as well?
You're talking about pricing of raw materials?
Yeah, sir. Particularly with respect to timber or with respect to chemicals.
So, if we see the pricing in wood has increased a bit, that is because of a seasonality that is there in wood. Currently, it's in shorter supply compared to other periods, but wood availability is likely to increase in the coming quarters. So it's going to have again an offset and average out to the yearly requirement, yearly average we normally operate in. Big stock currently is on a lower trend. We have been able to reduce our prices by almost 15% compared to the last quarter, and that trend is continuing. So we are witnessing a reduction in price of our other main raw material, which is straw. Chemicals are normally remaining flat, and I don't see any huge change in the pricing of chemicals and other inputs.
Okay. So the gross margins, which we enjoy currently around 60-70%, so the trend will remain on a similar basis in Q4 in the subsequent quarters?
Well, on the cost front, we are quite competitive, but with a reduction or a change in market prices, it could affect our EBITDA levels and margins going forward. And that would be temporary. So maybe this one quarter could be a little a challenge, but I think going forward it will be back to normal and better.
And so in your experience,
sorry to interrupt, Mr. Gupta. May we request you return to the question queue for any follow-up questions?
Sure.
Thank you.
Thanks. I will be back in the queue. Thank you.
The next question is from the line of Tej Patel from Niveshaay. Please go ahead.
Hello.
Yes, please.
Yeah. So, sir, I know you discussed, earlier in this call only, but just I wanted to get, more, in detail from you. But so you say that the wood pulp prices have increased Q-on-Q, right? If you could give in terms of percentage, how much they have increased, and it's been 1 month since in this quarter, and how much wood prices do you anticipate going to increase given the Red Sea situation currently? And what is the delta between the import price and the price that the domestic paper producers are selling? And given that they aren't able to export to other countries because of the Red Sea issue. Do you see this delta increasing over the periods, given the increasing volumes coming from the imports from the Southeast Asian countries?
So I'll try and answer your question one by one, Mr. Tej. Wood pricing has increased by about 8% quarter on quarter, and it is stable at that. We don't foresee a further increase. In fact, it could reduce with wood availability getting better in the coming quarters. With respect to the delta, it's an average that one can measure. It's not something which is all across the board. There are certain quantities which are coming in at lower pricing, but most quantities are averaging around $700 per ton. And what we were exporting earlier was about $780 to $800 per ton. And this $700 per ton translates to about 65,000 rupees per ton locally. But domestic market is averaging about 71 to 74,000 rupees per ton, which we are being able to manage quite successfully, because imports cannot partake of and fulfill the entire requirement of the country. So we have an upper hand there, and this delta we will be able to manage going forward.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Kunal Tokis from Fair Value Capital. Please go ahead.
Thank you, sir. Am I audible?
Yes, please.
A few quick questions. You said that the effect of an increase or decrease in international pulp prices applies to the lag on paper prices. So in your experience, what has that lag period been like? Is it a few weeks, a few months, or a few days?
Normally, it's between 30 to 45 days. But with the uncertainties that are happening across the world, with whatever is happening in the economic front, U.S. rates, the way they are going, wars going on, one doesn't really know for sure what is the kind of lag that we are going to experience. But yes, on an average, it's about 30 to 45 days.
Okay. And are you extending any R&D efforts on developing new specialty products?
Yes, of course. There's a huge R&D effort that is going on. We've already implemented 2 new products which are offsetting the use of single-use plastics. And that effort is going to continue, and that is what is going to make up the bulk of our specialty paper products going forward.
All right. And sir, in the last call, we hypothesized that the industry might see more consolidation happening with mills closing down or bigger mills acquiring other mills. Have you seen that trend continue in the latest quarter?
At the moment, one has not heard of anything per se. It's status quo as of now. But what one does hear of is that it may continue for the long run. It will continue for the long run. But as in how these deals happen, I think everybody will get to know about them.
Okay. Just a final quick question. I know you mentioned, you talked about it in your opening comments, but can you provide a timeline for the capacity expansion that you are undertaking?
So a majority of expansion will get completed by March 25 within the next 12, 14 months. And the balance, small part will get extended into up to September of 25 till March of 26.
So by the majority,
Yes.
mean the majority of the 50% increase?
Yes. I think about 60% increase we should be able to take in and complete by March of 25, the effect of which will be very, very visible in the financial year 25-26.
All right, sir. Thank you for answering the question.
Thank you. The next question is from the line of Ankit Gupta, who's an individual investor. Please go ahead. Mr. Gupta, your line is unmuted. You may please ask your question.
Yeah, I think my question got answered. Thank you.
Thank you. Press star and 1 to ask a question. The next question is from the line of Rosmik Oza from 9 Ways Equity Research. Please go ahead.
Thanks for the follow-up question. Just to understand, how do you see FY25 planning for in profitability? Because, the new strategies will only come up in FY26, and we're already running at more than 9% utilization right now. That's my first question. And my second question is, how do you, try and actually secure the raw material, as and when you, increase the capacity? Because will there be adequate availability of raw materials for making this higher production of going forward?
So I'll answer both the questions. The trending on profitability is quite stable, and I think we've declared good results. 26% EBITDA levels plus is I think a good robust performance. Going forward with the increase in capacity, I don't see it's not a good exercise to collect material in advance, because it's a very, very seasonal availability and very, very subject to the vagaries of environment. So you cannot really store this material, and because it is open to decay. But I would, on the other hand, say that a good enough availability is there in the market, and whatever is our requirement will clearly be catered to, will be available within the state of Punjab where we operate. There's plentiful of raw material, both in terms of wheat straw, the primary material that we operate in, as well as wood supplies. And also the fact that we've also done a study which suggests that there is enough and adequate availability of the same. And with the propagation of our clonal saplings and clonal nursery, which we are doing in a big way, we are trending on towards increasing the wood availability in future for ourselves and for the community at large.
Can you repeat my first question? That doing 26% EBITDA margin, but next year, will the profits of 2020 be higher than FY, or will the margins better than FY24? That's what I was trying to understand.
Yes, so we are targeting better margins in the financial year 25-26 with on the back of better operational efficiencies, and with some of our capacity increase, a small increment coming in this year, financial year 25-26 itself. So on back of primarily on better efficiencies and better operationability, we do see a betterment in our EBITDA margins going forward.
Okay. Thank you, sir.
Thank you. The next question is from the line of Imran from Longbow India Capital. Please go ahead.
Hi, thanks for the opportunity. Sir, can you please share the pricing separately for maybe the writing and printing paper and the other that you make?
I would say, Imran, that's a little bit of confidential in nature, because that's how we are able to create a good marketing plan for ourselves. But suffice to say that there is a delta of about 5 to 8% between pricing of writing and printing paper and specialty segment paper.
So specialty would be higher by
yes, higher.
percentage?
Yes, higher.
All right. I had an impression that this, especially the cut size paper, which is used mostly in offices, I thought it is the highest priced category, but I think I stand correct here, and the other ones that you mentioned are the highest priced products, right?
So what you are mentioning, cut size, that is copier that is used in offices, that's not what we identify as specialty paper. That we take as retail writing and printing paper segment only. Our specialty paper is a exclusive paper going into very, very varied applications, and primarily now the focus will be on to replace single-use plastic ban which has come in and find the rightful replacement of those kind of usages with paper.
Right. And can you at least give a split between the specialty and the other paper that you make?
Yeah, we are doing about 20% of specialty paper, and balance is writing and printing. So even under writing and printing, there are various categories like copier, there's maplitho, there's cream wove, there's high bulk paper. So even it's not like 80% is one category alone. There are different product portfolios under that category as well, but all under the overall category of writing and printing paper.
Right. And sir, if it is possible, otherwise you can skip this question. If you can divide the 80% into copier and non-copier, if that is possible.
Copier is about 18%, and balance would be the segments of maplitho, cream wove, high bulk papers.
All right. Thank you so much. I'll come back to you.
Thank you. Participants may press star and one to ask a question. Next question is from the line of Yash Malhotra from JM Mutual Funds. Please go ahead.
Yes, sir. What would be the kind of aspirational number you're looking for specialty, let's say 3 years down the line?
Well,
in terms of
as
your...
I said, it's just upgradation happening. We will be producing about 200 tons per day, which is 30% of our capacity. But 3 years down the line, maybe we look at another specialty paper machine, which is going to be specifically for this product, which could be another further 150 tons per day. So that's going to add to this 200 tons and make it about 300 to 350 tons going forward.
Correct. So it would be fair to assume 20% going to 30 as a percent of revenue.
Yeah, that is already in the works. But as you said, it's going to. If you're asking a 3-year visionary statement, I say the 200 tons could be further increased to about 300, 350 tons with the new machine, new specialty paper machine.
And these also operate at 90+% capacity.
Absolutely.
Correct. All right. Thank you.
Thank you. Participants may press star and one to ask a question. As there are no further questions from the participants, I now hand the conference over to Mr. Pawan Khaitan for closing comments.
So thank you all for participating in this earnings conference call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relations managers at Valorem Advisors. Thank you and wishing you all a great day ahead.
Thank you. On behalf of Quantum Papers Limited, this concludes this conference. Thank you for joining us. You may now disconnect your lines.